All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. My apologies for the late start here. Was having a little trouble getting the video functioning here. It's going to come across a little bit differently, but will be fixed in the replay. So my apologies for that here. But let's go get to it. Market off to about a 17-point open higher, about 0.5% here on the market. Some of the home builders and whatnot leading the way here, and a lot of the tech that has been on fire. Just continuing with their trends. We're seeing the energy names continue to drop. We're seeing gold continue to drop. So those themes we talked about yesterday afternoon, we see them just carrying on here this morning, and I do expect that they will continue. It's not something that I look at and go, well, no, this is the end of that. It is the likely rotation for the next little bit, and we'll see some stocks kind of come in and switch around with that. But it's gonna be the rotation at least until we see the jobs report on Friday, is what I suspect there with that. Now we have as far as the challenge goes, we don't have any new signals, but let me show you what the scans look like. On the bearish crossover list, we have ConocoPhillips, FCX, and Vale. You'll notice this is energy and materials, right? And FCX and Vale, these are going to be, these aren't going to be, downside signals on their 3-7 crosses. These are coming off of nice little highs here. And they have some significant, consolidation risk. ConocoPhillips, the same thing. They're all kind of that same element. And let's face it, we've seen a lot of stocks like this here of late, right? We saw J.P. Morgan do it, last week where it broke below the 7. We didn't get, in the downside 3-7 crossover, we didn't get that heavy drop, come in. What are we getting? We're getting consolidation. And, that's what we're looking at when it comes to FCX, Vale, ConocoPhillips. Now, on the upside, let me show it to you here. On the bullish crossover side, you can see Johnson & Johnson, Coca-Cola, MGM, and UPS. Now, I talked about UPS yesterday, and this element of coming off the lower Bollinger Band and breaking above the 7-day moving average. I know it sold off a little bit into the close yesterday. So what? And nice little upward move here this morning. This does have potential to be a challenge trigger here today. The consolidation risk component on it is a little bit higher than I thought it would be. But, by the end of the day, we could see that sift short, get up, pull on down a little bit. But we'll see there with UPS. We have MGM, which talked about yesterday, had a crossover yesterday until the close and sold off into the close, erased the crossover, and it's kind of doing the same thing as UPS. Now, even with the crossover yesterday, it wasn't a signal. The consolidation risk was too high on it. So I'm not expecting that it would be a signal here today. And then Coca-Cola. And this is one that had the downside crossover last week and, just came on as consolidation risk too high. No real chance of a 2 ATR trend to, downward. Now we're seeing it pop back up, and the consolidation risk on it's relatively low. And so we could be in for some nice little breakout action here in Coca-Cola. We'll see, this afternoon. It's not a trigger this morning, but with the lighter afternoon parameters, we could easily see it be a trigger this afternoon. But Coca-Cola has an issue with it that, we saw with IBM, that we saw with Starbucks, that we saw with CSX, and that is that earnings are the 17th. So earnings are priced into those options. They're still playable, but, the risk-reward just isn't that great there with them. And then we have Johnson & Johnson with an upside crossover here. And, you kind of see what this stock has been like here. It's had a small little pullback last week. A little upside crossover action here this week. The consolidation risk component on it is pretty high. And, even if it were to signal, it's not something I could trade. January 22nd are the earnings. I looked at the options this this morning. They're just not all that great. And, we've dealt with this every single challenge, right? We go through earnings season, and, there's things that can trade and things that can't. Right now, you're kind of just in that position where what is triggering, just doesn't have, that great or doesn't have the best option valuation. It doesn't mean that we're still not seeing the algorithm find trends. And when we look at the things that have signaled so far, for the challenge, we are finding trend, right? From Starbucks, which nice little upgrade on it this morning, helping it to push up into this 90-91 area. We have Disney, which so far has not, emerged on that trend here. This is one that could trigger today if there's a crossover, but, it would need that crossover action, and so far it doesn't have it. This thing showed sign of trend and pretty much has gone flat since, at least so far. And then Netflix and CSX. Netflix has carried on higher. Nice little trend action, here on Netflix. And then, CSX, which weren't able to trade for the challenge. It is pushed on higher. Nothing too significant. In fact, the option values really haven't changed all that much because of the earnings price that was in them. So not a great, at least so far, nothing great for the options. And then IBM, which triggered yesterday afternoon, it's carrying on higher. But again, the earnings priced into the options there. So, the algorithm is on, is doing its thing as far as finding the trends. And, I expect that to continue. And we'll react to the signals as they come in. Now, I was asked yesterday afternoon about the ATR method and the application of the ATR method to the challenge signals. And that's something I've talked about before. And if you want more information on that, you can come to the spreadsheet and just take a look at the ATR method and the video discussion, right? And the ATR method is what is applied to the signals to give entry and exits, right? To basically say, all right, you know what, the signal's creating our entry. The signal's telling us there's a high probability of trend. The ATR is what manages the risk, other than the option selection, and what kind of allows or gets the trades, puts the exits on the trade. We can adjust these in a million different variations, right? And if you look, you say, well, if the ATR method was a little bit looser, we'd still be in Starbucks. And you're right. We absolutely would. If the ATR method were a little bit looser, last challenge, we would have been able to run this run with gold, right? But it's also one of those where when you look at the data on a whole, if the ATR method is expanded, there are some where, hey, those options go to zero. Right? And that is, one of the balances here with it. And as you know, I'm constantly testing, different things for different markets. But, for the most part, this has been the model that, has modeled things the best, that has performed the best in live trading. And it doesn't feel real good when it knocks us out of something, and then the stock does what it indicated it would do. But I will continue to run with it, and look to use it for all future trades here. Okay. All right. Now, market moving up here this morning. It's being driven, and I mentioned it in my note this morning, it's being driven by the announcement last night that the Chinese vice premier is going to be coming to the U.S., coming to America to sign the trade agreement. So we see that element of fear with U.S.-China relations really dropping in a big way. Not just a little way, but a big way. And, if you look at some of the stocks that are most affected or were most affected by, negative talks between the U.S. and China, those are some of the stocks that are performing the best. And, I would expect for that to continue. Sometime this year we'll get another piece of turmoil between the U.S. and China on the trade talks, but I don't expect it to be much. With elections coming and a preliminary deal, both sides can claim victory without, having to really shake up the apple cart in, a significant way here. All right. As far as U.S. Iran, things are ongoing there. There's going to be a continued risk of, possible action and something that could, drop or pop the markets. That's just something the market's going to have to live with. They always have to live with some element of that. And that will, that's not going to go away, this week. It's not going to go away this month. Probably not going to go away this year or next year. It's probably something that's going to be like it has been with the markets for 20, 30, 40 years, to varying degrees, there. All right, so that's things here this morning. If you're looking in the short run, on this market, this morning's lows are a very interesting level. Meaning if this morning's lows break, we'll probably see some sell pressure come in. And so if you're out there buying and you're saying, well, I don't want to get caught up if things turn around, just look at this morning's lows. These were the highs from yesterday, right? This morning's lows were basically the highs from yesterday. And, if that level breaks, we'll probably see some sell pressure come in. There's no sign that level's going to break. And, in fact, all signs are point higher. And so you can kind of use that if you're looking for a really tight stop area to come into play here. Let's say you want to go buy an Adobe or an Apple. And, those stocks are just not in great technical positions for really strong stops or anything like that. Well, just look at the lows here from today. So I know a few of you are still holding on to some Starbucks calls. And you say, well, what do I do? Well, hold on, right? You hold them. And if the market breaks the lows from today, you say, you know what, I'm going to pull them and go, right? Yeah, Starbucks probably isn't going to pull back all that much. But, if you're antsy, if you're nervous about it all, that's a pretty good spot to, use there for it. If you're looking to get heavily bearish and say, well, I'm going to short it right here, you just don't have a good stop level on top. Meaning, you're top picking, and they're just not a great stop level there for it. Now, can you top pick or use something like a Caterpillar to trade to the downside? Absolutely. You can use this morning's highs. We talked about Caterpillar yesterday, and that if it breaks yesterday's lows, down she goes, and it's setting up rather nicely there. So there's plenty of differentiation out there, between sectors and stocks, and most of it that similar element